Today we welcome Nicole Wong, who's the regional head of property research at CLSA, and she's one of the top-ranked China property stocks analysts around. Good to see you, Nicole. Let me just first start off this conversation talking about what Premier Wen has been saying at the National People's Congress. Has anything piqued your interest as an analyst on these stocks?
I think that what Premier Wen has been saying is not substantially different from what, in general, the message from the government has been. And the thing I see about central government in China is that they are actually extremely resourceful and powerful, given that they actually have the luxury of having a closed capital market, which means that they can move interest rate with a lot more flexibility without too much constraint by the cost of money. So in terms of the property market, I see that they have a lot that they could do, but the most powerful tool, which is interest rate, is what they can use.
So you're seeing interest rates coming down the pipeline, is that right? Is that the only tightening measure you see the central government coming out with to try to rein in property prices right now?
I think that's the most powerful measures that they could use. That is why it hasn't really come up yet, and that's why they are putting out a lot of other kind of policies. That's the warning signal, and the real policies is going to come in terms of the mortgage rate. Okay,
in terms of the mortgage rate. Let me just ask you this, Nicole. Broadly, is there even a bubble in the Chinese real estate sector right now? There's a lot of disagreement on that, but have you seen the surge in property prices? We saw January 10% increase in prices across China. Some say there is. What do you think?
Well, there are different definitions about bubble, but from our view, we don't see a bubble because if you look at a bubble, it's not sustainable, which means that you have at least to see both very high prices and leverage. But then if we look at the leverage in terms of the property market of China, it's not too high at all. In fact, we see a lot of people putting down 30, 40, 50% down payment. But for sure, this kind of price increases is going to cause problem because it's just exceeding people's purchasing power too quickly, driven by liquidity.